Physical AI, Tom. I mean, are we literally talking robots here?
We are essentially using and talking about robotics, and that's certainly what Alibaba is focusing in on when it comes to this partnership with NVIDIA that they have now confirmed. This is focused on the cloud part of Alibaba's business, which has been a significant revenue driver, but it was really a forward-looking, future-looking prospect as they look to integrate some of NVIDIA's software into that cloud proposition and try to connect up some of these hardware devices, notably robotics. But you also had, of course, the CEO of Alibaba talking about their investments on AI infrastructure and data centers, and of course it aligns with all that spending that we've been hearing about in recent days, and just for many, certainly the bulls will confirm that that demand picture remains, and certainly the capex and the spend on infrastructure and data centers is very far from over. The CEO of Alibaba saying they are going to be spending more than their original $50 billion in terms of plans around data centers and infrastructure on AI. They're going to outstrip that number, and actually projects, the CEO of Alibaba, potentially $4 trillion of money being spent on data centers and infrastructure globally over the next 5 years, and Alibaba clearly positioning itself to be a big part of that story.
I have to check, but I think that's actually bigger than the entire market cap of NVIDIA the last I looked, which is fascinating. But it is interesting, right? Because there was this awkwardness between NVIDIA specifically, and the US company, and China. So is this changing the relationship between the two?
Well, it's a reminder, isn't it, that NVIDIA is not just the maker of GPUs, it's not just the maker of the AI accelerators, but of course it has that very sophisticated and deep software stack as well. And it's the software part of the business, or the unit at least, and the product that they are now partnering with Alibaba on. We'll see if there's any response, of course, from the US or China on that front. It is intriguing, to your point, because we've had, of course, Chinese authorities trying to pressure companies like Alibaba and Tencent from not using NVIDIA's chips. But this is not the chips, this is the software, so maybe they are comfortable with that for now. And it's a reminder as well that Alibaba is very much at the forefront, at the cutting edge when it comes to China's AI innovation, with a rapid turnaround and update of their own models.
Similar to Cisco's dangerous vendor loans during the dot-com boom, NVIDIA's $100 billion investment in OpenAI, which is connected to $350 billion in semiconductor sales, raises questions about circular financing. The $1 trillion data center goal of OpenAI is largely dependent on NVIDIA's investment, which may result in reduced profits for NVIDIA, but secures essential chip supply for AI expansion. With its portion of the generative AI stock index rising 403%, NVIDIA is leading the AI hardware industry, which is booming and propelling market expansion. Since the start of 2023, NVIDIA's stock has increased 1,124% and 29% so far this year. According to the New York Times, the company's $100 billion investment in OpenAI made others wonder if that surge would last. The most basic query is NVIDIA utilizing its own funds to support the rising demand for its graphics processing units through investments in OpenAI, CoreWeave, and other ventures? This reminds me of the dot-com bubble, when Cisco Systems financed new businesses to meet the increasing demand for its networking gear. The corporation gave billions of dollars to telecom companies that were losing money so they could purchase Cisco's technology through its Cisco Capital division. Cisco frequently reported revenue growth of 40% to 60% in the late 1990s, and by 2000, these financing and leasing agreements accounted for 10% of the company's $20 billion in revenue. Cisco toughened its lending requirements, stated the Los Angeles Times, and set aside $900 million in reserves for poor loans to those customers when the dot bubble crashed in 2001. Although the GPU manufacturer won't have to write off bad loans as Cisco did if its investments don't pay off, NVIDIA may deduct the value of those investments from its balance sheet. NVIDIA and OpenAI are now leading a V-shaped forward migration of AI technology suppliers as a result of all these investments. According to the Wall Street Journal, OpenAI intends to construct $1 trillion worth of data centers, of which $300 billion will be provided with assistance from Oracle and an additional $100 billion from the NVIDIA acquisition. Compute is where it all begins, said OpenAI CEO Sam Altman in a statement. The economy of the future will be built on compute infrastructure, and we will use what we're developing with NVIDIA to both develop new AI innovations and provide them to individuals and companies on a large scale. The sector will continue to grow if OpenAI, which the journal said last autumn predicted it would lose $44 billion through 2029, can find the money to finance these data centers. Shares of NVIDIA, Oracle, and numerous other AI ecosystem players might continue to rise as a result. Otherwise, have a peek below. In $10 billion installments, NVIDIA intends to invest $100 billion in OpenAI. NVIDIA will invest $10 billion for each gigawatt of OpenAI-supported data centers. According to New Street Research analyst Pierre Ferragu, whose work was published in The Economist, OpenAI would purchase $35 billion worth of NVIDIA processors for every $10 billion invested by NVIDIA. OpenAI will pay 71% in cash and 29% in shares for this purchase, according to New Street Research. The deal's reduced margins for NVIDIA are one concerning feature. According to the journal, that arrangement reduces NVIDIA's typical margins for cutting-edge chips, but the chip designer will gain from stable GPU demand. Because of NVIDIA's comparatively excellent credit rating, this transaction also reduces OpenAI's cost of funding. Before this agreement, the journal stated that OpenAI purchased thousands of NVIDIA chips through cloud service providers and neoclouds, who purchase chips and create data center clusters, renting them out at a premium. To fund their operations, many data center builders take out loans. According to the journal, data center deals backed by financially troubled companies like OpenAI were finance-to-date interest rates as high as 15%, while deals backed by Microsoft had interest rates ranging from 6% to 9%. With $72 billion in free cash flow over the last 4 quarters, NVIDIA appears to have enough interest-free money to finance its OpenAI agreement. Whether OpenAI purchases $350 billion worth of the company's GPUs will depend on whether the chip designer ultimately funds its entire $100 billion commitment. Regarding NVIDIA's investment, analysts had differing views. The investment guarantees that things will be developed, which is positive. The bad news is circularity, which I take to indicate that NVIDIA is purchasing its own products through a third party. On the one hand, this helps NVIDIA make sure that stuff gets built, and on the other hand, it helps OpenAI deliver on some very aspirational goals for compute infrastructure, Bernstein analyst Stacy Rasgon told Reuters. However, the circular issues have already been brought up, and this will just exacerbate them, Rasgon continued. According to several estimates, the transaction will increase NVIDIA's revenue by $400 billion to $500 billion. For instance, Timothy Arcuri, an analyst at UBS, stated in a note that they believe this purchase will ultimately result in approximately $400 billion in NVDA revenue over a number of years. NVIDIA is making a lot of deals. The GPU manufacturer has now partnered with Alibaba of China just days after pledging to invest a staggering $100 billion in OpenAI and $5 billion in Intel. Alibaba announced on Wednesday that its cloud platform for AI will incorporate NVIDIA's AI development tools for robots, autonomous vehicles, and connected places. The massive Chinese online retailer will sell NVIDIA's physical AI software stack, which can create 3D representations of real-world settings to create artificial intelligence, AI models that can be trained for robotics, self-driving cars, or smart areas like warehouses and factories. The deal's financial details were not made public, but it represents a substantial partnership between a leading cloud services and AI model creator and the world's leading chip developer for training AI models. The agreement comes as Alibaba concentrates on expanding its AI division in addition to its core e-commerce operations. On Wednesday, the business announced plans to open its first data centers in Brazil, France, and the Netherlands, and announced that it is increasing its spending on AI technology above its prior $50 billion goal. Additionally, it is increasing its data center presence to 91 locations across 29 regions worldwide and establishing new data centers in more nations. Alibaba also debuted Qwen 3 Max, the most recent version of its Qwen series of large language models, on Wednesday. According to the company, the model, which was trained on 1 trillion parameters, is its biggest and most powerful model to date and is ideal for agentic encoding applications. NVIDIA's significant projected investment in OpenAI will allow the chipmaker to own stock in the AI firm while also generating income. In order to pay for the pricey processors over time, OpenAI is leasing NVIDIA's graphics processing units. According to Jamie Zakalik, an analyst at Neuberger Berman, investors are worried about how this acquisition will affect everyone's revenues and metrics. The artificial intelligence startup OpenAI will receive billions of dollars from NVIDIA's huge investment, which was revealed earlier this week, to be used any way it sees fit. However, the majority of the funds will be used to purchase NVIDIA's state-of-the-art CPUs. The two firms' agreement was vague on details but heavy on statistics. According to them, the investment might total up to $100 billion, which would be dispersed as AI supercomputing facilities are built over the next several years, the first of which is expected to go online in the second half of 2026. It is still unclear when the build-outs will take place and how much each data center would cost. However, it has come to light that OpenAI intends to lease rather than buy NVIDIA's graphics processing units, GPUs, outright, according to persons with knowledge of the situation who asked not to be identified because the information is confidential. According to NVIDIA CEO Jensen Huang, who called last week's agreement monumental in size, an AI data center with a gigawatt of capacity would cost about $50 billion, of which $35 billion would go toward purchasing NVIDIA's GPUs. OpenAI may spread its expenses across the GPU's useful lives, which could last up to 5 years, by leasing the processors, so shifting more of the risk to NVIDIA. NVIDIA committed to making gradual investments as OpenAI's data centers are operational. According to a source who spoke to CNBC, OpenAI will soon have access to the first $10 billion, which will aid the company in constructing its first gigawatt of capacity. According to the persons, OpenAI will primarily be utilized for computation, even though NVIDIA's equity involvement may aid with recruiting, marketing, and operations. And nearly all of that is aimed at NVIDIA's GPUs, which are essential for executing AI workloads and for creating and training big language models. Financing is still expensive because the firm is not investment grade and does not have positive cash flow. Executives at OpenAI have referred to equity as the most costly method of funding data centers and stated that the company is getting ready to take on debt in order to pay for the remaining development. According to a source, NVIDIA's leasing option and long-term commitment will help OpenAI obtain better terms from banks when it comes to raising loans, in addition to providing an affordable means of obtaining chips. OpenAI CFO Sarah Fryer discussed the role Oracle and NVIDIA are playing in the funding while speaking to CNBC in Abilene, Texas, the location of the first new data center. The Abilene facility is being leased by Oracle, one of OpenAI's partners on the Stargate project, and OpenAI will eventually cover the costs of the operations. According to Fryer, companies such as Oracle are working hard to build the amazing data centers you see behind us. In the case of NVIDIA, they are assembling some equity to get it off the ground, but more significantly, they will be compensated for all of those chips as they are deployed. She stated that in order to alleviate a severe capacity deficit, all of the major partners are required. The fact that there isn't enough compute is what I believe we should all be concentrating on today, Fryer stated. We will have more than enough money to cover our future expenses as the company expands, more sales, more compute. However, the OpenAI-NVIDIA agreement has sparked some questions on how long the AI boom will last. GPU sales to OpenAI and industry giants like Google, Meta, Microsoft, and Amazon have propelled NVIDIA's ascent to a $4.3 trillion market valuation. Microsoft and other large investors have contributed to OpenAI's rise to a $500 billion private market valuation, enabling the business to invest billions of dollars in developing its AI models that underpin ChatGPT and other services. The NVIDIA deal, according to Jamie Zakalik, an analyst at Neuberger Berman, is the most recent instance of OpenAI raising funding and then reinvesting it in the business that provided it. According to Zakalik, investors are worried about how this purchase will affect everyone's earnings and metrics. However, it isn't really producing anything. When asked about those concerns, Altman told CNBC that the company's main goal is to create genuine demand. He remarked that we must continue to produce these amazing new things that people pay us a lot of money for and to offer services to businesses and individuals. As long as that continues, a lot of these data centers and chips will be paid for. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
The tidal wave of AI spending continues. Shares of Alibaba surging this morning after ramping up its AI investment target. And in just 48 hours, OpenAI announcing a build-out equivalent to 17 nuclear reactors, totaling $850 billion in spending. For today's Tech Check, Mackenzie Sagalos asked OpenAI CEO Sam Altman about the increased spend. Mac.
Hey, Leslie. So at roughly $50 billion per gigawatt, OpenAI's projects from just the past 2 days add up to nearly half of the $2 trillion global AI infrastructure surge HSBC now forecasts. The scale is staggering, even for a company raising a record amount of private market cash. I spoke to OpenAI CEO Sam Altman in Abilene, Texas. He called this the largest infrastructure push of the modern internet era and acknowledged that the $850 billion build-out may look scary from the outside, but argued that it's the only way to keep up with demand that's already grown tenfold in the last 18 months.
And this is what it takes to deliver AI. AI, unlike previous technological revolutions or previous versions of the internet, there's so much infrastructure that's required. And this is a small sample of it.
Now, Altman insisted the building boom is in response to soaring demand, noting that OpenAI is growing faster than any business that he's ever heard of. He also pushed back on bubble fears, saying, yes, people will get burned, but every past technological revolution has gone through cycles just like this.
People will get burned on overinvesting, and people will also get burned on underinvesting and not having enough capacity. Smart people will get overexcited, and people will lose a lot of money, people will make a lot of money. But I am confident that long-term, the value of this technology is going to be gigantic to society.
Now, one tech company that could be worried about underinvesting is Alibaba. It just revealed plans to increase its spending on AI models and infrastructure development on top of the $53 billion that it already committed to spending on its big AI push, really underscoring just how global this Gen AI arms race has become. Guys?
Mac, can you remind us just kind of where the arms race sits with regard to U.S. spending versus China? I mean, it sounds like, just based on what the hyperscalers are doing all the way through the supply chain for AI, that the U.S. is well ahead in terms of its spending. And do we even have a clear picture of how much China is spending outside of the $53 billion or so that Alibaba upped its target to today?
So Alibaba is one of those companies that wants to compete both as a hyperscaler, potentially a chip maker, and then it also has its large language models. Part of this announcement was that they would have the latest version of Qwen. That's the name of their LLM. But to your point, how does this spending compare? That's something that they didn't disclose yet, the amount of money that they're going to be adding onto that $53 billion budget. What we do know is that Alibaba is opening new data centers in Brazil, France, and the Netherlands. And part of that has to do with co-location, wanting to be closer to where your end user is so that the models move faster. We also know that in China, Tencent and Baidu have been competing with the model makers, competing with the likes of Anthropic and OpenAI. CEO Eddie Wu of Alibaba really underlining this fact that they want to be more of a player in this hyperscaler competition, be more self-sufficient. And you know what? NVIDIA being blocked from selling their chips into the country is really helping them with that ambition.
I'll tell you what's really interesting, Mac, is this. We are clearly in an environment, and you can look at a 5-year of BABA where companies are being rewarded for spending a ton of money, and that gets reflected in what China, a large cap tech, has done versus the S&P.
Well, it's absolutely true. I mean, Alibaba just had its best day. Its shares had its best day in 4 years. I'm looking at the K-Web right here. It's up 3%. Just today, up 46% this year. That is an ETF that tracks China's biggest internet names. And so it is certainly an age where you're putting these blockbuster, multi-billion-dollar deal announcements out there and you're being rewarded in the stock market. Yesterday, I was out in Abilene, Texas, reporting on an expanded infrastructure bill between the likes of SoftBank, Oracle, and OpenAI. In the after hours, we saw NVIDIA, which is also a part of this, moving higher after selling off during the day.